Hi, I'm Bob Graham, president of Riggs Asset Management Company. Today we're going to talk about something, I don't know if it's a little bit different, but coming up next week, we're having a Federal Reserve board meeting. And we usually don't talk about these things. They happen every 6 weeks because there's really not a lot to talk about. But on this one, there's a lot going on. So let's take a step back a little bit. Over the last 2.5 years, we've had what I'll call an unusual rate environment that has been affecting the economy. So if you go back to 2022, the Federal Reserve began the fastest, most aggressive rate increase cycle that we've ever seen in U.S. history. They literally took short-term rates, the Fed funds rate, from practically zero to 5.5%. Over the last year, they've kept the rate steady at about that level, trading in a range, but we'll call it 5.5%. Well, they've announced recently that they're going to begin reversing that process. They're going to begin cutting interest rates and reducing short-term borrowing costs. This could be, over time, good for the economy, causing mortgage rates to come down, auto loans, those types of things become more affordable. So that's a positive. A little bit of a negative, it also means that money market rates are going to come down. You're probably going to continue to see bond yields come down. Well, and then bond prices will go up because they work inverse of each other. But the big deal is how it affects the economy and how it could affect portfolios. Right now, if you look at the markets, they're kind of betting that it's likely to be a 25 basis point rate cut or 1/4 percentage point. It's about a 60% odds of that, and about 40% odds that you get a 0.5 percentage or 50 basis point rate cut. The difference between those two can be pretty big, and they have to do with the psychology of the markets and how we may have some volatility around the announcement. We'll see what happens. I think if they go a 1/4 basis point, there could be concern that the Federal Reserve is moving too slowly and they're not getting aggressive enough to offset some of the slowdown in the economy. If they go 50 basis points or a 0.5 percentage point, a concern could be that, oh my gosh, the economy is worse than we thought, and the Federal Reserve knows something that the markets don't or that other people don't know. Regardless, I think there's going to be a lot of volatility around this period going into the meeting and coming out of the meeting. Interestingly, though, there are things that actually will benefit from what we are seeing, and that is, I want to talk particularly about gold. We've seen gold today hitting all-time highs. Gold miners are hitting highs. And the reason being is because as the Federal Reserve begins the process of cutting rates, gold looks more attractive. The dollar tends to go down because foreign buyers aren't buying U.S. Treasuries because the yield's coming down. They're not as attractive from their perspective. And that tends to boost the price of gold. As gold goes up, miners make more profits. The other thing that happens is as the economy slows, the price of oil, the price of energy tends to go down. Well, that's their largest input. That is them being gold miners. Their largest cost outside of the land itself is the energy it takes to extract the gold. So as gold goes up, energy prices come down, their margins or their profits expand. So we think as we go through this process that gold and gold miners should do very, very well in this period. Also bonds, as yields come down, bond prices go up. So bonds should also do well. So in all of this volatility and all the news that we're going to hear next week and probably for a couple of weeks after this, remember, you have a really good position in gold and gold miners. In fact, we've been adding to those positions recently. You have a very strong position in fixed income that should benefit from this environment. And quite frankly, we've been prepping the portfolios so that when all of this is going on and all the volatility we potentially see around this meeting happens, your portfolios are actually going to benefit. We thought this one was kind of interesting, an unusual change in the environment that we're seeing. And I really do think this is probably the one Federal Reserve meeting where it's worth watching, paying attention to, but know that we've taken proactive steps to place your portfolios in a position to take advantage of what we're likely to see. If you have questions about this video or any questions having to do with the Federal Reserve or economics, or for that matter, your personal financial plan, please reach out to your Riggs Investment Advisor representative, and we'll be happy to answer whatever questions you have. Thank you again.